Hey, good morning, everybody. Ghost Face True Players Club stock investing is back. So today we're going to talk about Digital Brands Group Inc., ticker symbol DBGI on the NASDAQ, and DBGIW, the stock warrants. Okay, so right now it's at $1.73. There is a large volume order that just came through for 5,000 shares at $1.70. It's up over 6% today already. This could be the very beginning of a run up to, like, I don't know, like $2 probably, um, something like that. Futures DBGIW is at $11.20. So that's up today. And Berkshire Hathaway, ticker symbol BRKA, we're going to talk about that as well. That is down today. It's down to below $616,000 a share. That's pretty significant for Berkshire Hathaway. It already dipped down earlier this morning to $615,000. So, yeah, it's also a small float, low float, like DBGI. 1.44 million shares of Berkshire Hathaway. I think that might even include the Class B shares too, though. I'm not really sure. I haven't really done like a deep dive yet into it. But what's interesting is the Fed keeping the interest rate so high has finally started to hurt some of the large cap stocks like Berkshire Hathaway. Berkshire Hathaway is kind of like intended to kind of track the entire economy as a whole and kind of all facets. They've kind of structured it so that it represents the entire economy. The S&P 500 is just the 500 best companies or most profitable or whatever they're calling it now. But if Berkshire Hathaway is falling, this is really interesting because that could mean that as it falls, at $615,000 a share as it falls, a lot of people could sell that, get out before it falls more, and buy a small cap stock like DBGI before it's about to skyrocket. Now, it likely won't skyrocket until next quarterly earnings get released in mid-August, but the float is less than 2 million shares. So it could skyrocket at any time. And, I say $2. It could go up to $2 today just to be conservative. But, it really could at any time just kind of skyrocket. And, it's going to be really interesting to see how this plays out, because small caps, I mean, many of them in 2021, if you adjust for their reverse splits, I mean, they were going for over $1,000 a share. DBGI was, MMAT was, ticker symbol MMAT. That's Metamaterials. They're a nanotechnology company of Canada, and um, Esports Entertainment Group, GMBL. So there's already speculation because Roaring Kitty's back. So a lot of this meme stuff from 2021 is back. Well, there was already a big article way back in 2021 talking about how GameStop, ticker symbol GME, might acquire Esports Entertainment, ticker symbol GMBL. Well, now even Roaring Kitty himself has so much equity, uh, and he could sell even a small amount of GME, and he could buy like almost the entire float of GMBL. GMBL has a float of only, let's see here. GMBL has a float of only 1.15 million shares. And it's kind of a risky stock, GMBL, right now, because their liabilities are more than their assets. So equity, total equity is negative 7.57 million. So it's kind of risky. I mean, you have to think of it as a long-term thing, though. They have financing that will last them at least through 2026. That's when their current financing expires. So yeah, but that's not really what I want to talk about today. DBGI is what we were talking about. So Roaring Kitty, besides GMBL, well, he like either GameStop or Roaring Kitty is likely to buy GMBL. However, they could also start buying DBGI. And I'm a large investor going long. So, I think I can take us there regardless of what these other influencers do or don't do. I really think I can. With my skills and everything else. Yeah. I'm kind of in a unique position where I kind of benefit if it goes down, and I really benefit if it goes up. So, because if it just stays down for like another year or so, I can just sit here and just accumulate more shares. Very few people will do that with one stock because they don't want the risk. I'm kind of in a point in my life where I just don't really care about the risk anymore. I have my mortgage paid off. I'm single. I don't really have a whole lot of monthly expenses. So someone like me, what I really want to do is just keep buying stocks. I buy and sell vacant land, and vacant land long term appreciates more than houses do. So vacant land is a better investment long term. Now, buying a house and like renting it, like fixing it up, renting it out, flipping it is a better investment short term. But land is a better investment long term. And so, I started realizing instead of trying to buy a house with, uh, you know, um, if I'm, paying it forward on down the line, I should buy stocks instead, stocks and or crypto. And now that there's this Texas stock exchange, some of these stocks that are penny stocks, where they got, they're not really going bankrupt or anything. They're popular, trendy companies that are in emerging growth tech company like esports and entertainment, for example. They voluntarily delisted to the OTC market, and so this Texas Stock Exchange. Guess what? I think you already know where I'm going with this. This Texas Stock Exchange, they could take on these stocks on the over-the-counter market that got voluntarily delisted. So once GMBL gets uplisted again, they used to be on the NASDAQ, right? So instead of uplisting to the NASDAQ, they're going to uplist to this new Texas Stock Exchange. And this new Texas Stock Exchange won't have this like ridiculous $1 minimum bid requirement. Well, it's also it's a share price, $1 minimum bid share price requirement. So all the shares have to be at least $1, or the stock will get delisted if it's like hanging out for more than like 180 days or whatever. But so now if this Texas Stock Exchange does not have this ridiculous $1 minimum bid requirement, now all these smaller emerging growth tech companies, they don't have to do a reverse split, which is what's been making investors so angry. So the NASDAQ is basically the NASDAQ is like the root cause of like DBGI, for example, doing all these reverse splits, because it requires the stock to be $1 or more. And if not, eventually reverse splits, the shares get erased, then the company has to raise more capital. Well, it doesn't have to, but typically what happens is, for one reason or another, they wind up doing a direct offering. And a direct offering is just them selling more shares to a like an institutional investor directly, not on the public market. But eventually, that investor turns around and is going to sell them on the public market. So there's going to be some future dilution coming. So to prevent that from happening, this Texas Stock Exchange, they could structure it in a way so that retail investors like myself don't get burned by these reverse splits. That would incentivize retail investors like myself to buy these small cap stocks. And it would take some of the risk and volatility out of it. And this concludes my TED Talk for today. Happy investing, people.